Hey everyone, I'm Natalie Brunell, and welcome to the CoinStories news block. Over the past few weeks, we've seen lots of announcements from companies about buying Bitcoin or adding more Bitcoin to their balance sheets, but it hasn't been enough to push the price through $100,000. This week, Bitcoin saw a healthy correction to $92,000 after surging about 45% over the last month. Now, there are several theories for why this drop's happening, from long-term holders taking some profits to greedy leveraged traders getting wiped out, but some people believe it's actually about global liquidity conditions. Now, I had a non-Bitcoin friend ask me earlier this week, what does that even mean, global liquidity? Well, it basically means the money in the system that's sloshing around, government spending and printing, banks lending out money. If there's more money going into the system, liquidity is going up. Analyst Joe Consorti recently posted a chart that showed how Bitcoin has typically tracked global liquidity with a lag of about 70 days. And what has global liquidity been doing lately? Well, it's actually been dropping sharply. Lynn Alden and Sam Callahan recently published a viral report that found Bitcoin has moved in the same direction as global liquidity for 83% of every 12-month period since 2013. So Joe's chart tracks with their findings. But the interesting thing is that although the dollar has been strengthening for the last 8 weeks straight, which is a sign that global liquidity is tightening, Bitcoin's price spiked upwards during that time, which is the opposite of what you'd normally expect to see. Now, if you go back and read Sam and Lynn's report, they do highlight scenarios where Bitcoin can break with its correlation to global liquidity. And this can happen when there are Bitcoin-specific events that move the price regardless of what global liquidity is doing. Think a ton of selling when something bad happens, like the FTX collapse, or when something good happens, like the launch of the ETFs, or perhaps when a pro-Bitcoin administration wins the election. Maybe this explains why Bitcoin has soared despite global liquidity drying up. Now, regardless of your political beliefs, a change in US leadership that's more open-minded about the industry is without a doubt a Bitcoin-specific bullish development. In the last 7 days or so, we had Bitcoin bull Howard Lutnick picked as Commerce Secretary, Scott Bessent, who has spoken favorably on Bitcoin, picked as Treasury Secretary, Gary Gensler announced he will resign in January, and there are rumors swirling around that Janet Yellen could retire next year. Now, if Consorti's chart holds true and Bitcoin's price does follow liquidity conditions as it normally does, then we could be in for some more pain in the short term. But perhaps what we are experiencing is one of those rare times when Bitcoin's price is driven not by liquidity, but rather by the idiosyncratic news specific to the industry. And in this case, it only seems to be good news for Bitcoin everywhere you look. And that's especially true on the corporate adoption side. Another week and another 50,000 plus Bitcoin have been bought by MicroStrategy. Michael Saylor seems to be making it a habit to announce massive purchases to start each week, and we're here for it. This latest purchase even topped the last one. MicroStrategy acquired another 55,500 Bitcoin for $5.4 billion. Now, to put this buying spree into perspective, it took MicroStrategy roughly 2.5 years to get its first 134,000 Bitcoin, and the last 134,000 took just 3 weeks. Semler Scientific also disclosed that it has bought an additional 297 Bitcoin for around $29 million and announced another $50 million at the market ATM equity offering, increasing its total offering to $100 million. Chairman Eric Semler, who I recently had on the show, tweeted the announcement of his company's latest Bitcoin purchase in the exact same style that Michael Saylor does. Now, we also saw a corporate Bitcoin newcomer this week. On Monday, Rumble, the $1.7 billion video sharing platform, announced that its board of directors has approved a corporate treasury diversification strategy to allocate up to $20 million into Bitcoin. Chairman and CEO Chris Pavlovski said Bitcoin is not subject to dilution through endless money printing, enabling it to be a valuable inflation hedge and an excellent addition to our treasury. So ever since the election, it seems like every day a new company decides to add a Bitcoin corporate treasury strategy, and many of these announcements cite the improved regulatory environment as one of the biggest reasons that they're finally pulling the trigger. I expect announcements like these to become even more frequent in 2025. All right, Bitcoin is having a bit of a moment in the US, but we have to remember that Bitcoin is a global asset, and there were a couple signs this week that Bitcoin is being embraced by governments abroad as well. We're seeing it happen in Morocco, one of only about a dozen countries that had an outright ban on cryptocurrencies. In 2017, it banned Bitcoin use, citing fraud, money laundering, and terrorism financing. Well, to be exact, the Moroccan government tried to ban Bitcoin, But in Chain Analysis' annual Global Crypto Adoption Index report, which looks at where cryptocurrency adoption is happening the most, Morocco ranked 20th in 2023. And this adoption rate makes sense given that Morocco's inflation rate spiked from 0% to more than 6% over the last 5 years. It reminds me of an important study I recently read, which was notable not just for its findings, but also for who authored it. 2 employees of the OCC, which is a bureau of the US Treasury Department. The study found that the inflation rate and the risk of sovereign default significantly influence crypto adoption in a country. So Morocco couldn't stop its citizens from fleeing to Bitcoin, and now it has apparently given up the fight. This week, the governor of Morocco's central bank announced that Morocco is currently working on adopting legislation that would create a legal framework around digital assets and legalize the use of Bitcoin in the country. So Morocco's Bitcoin journey is just more evidence of how hard it is for a government to stop Bitcoin. As the saying goes, you can't ban it, you can only ban yourself from it. Another bit of global news happened in Brazil, where a bill to create a strategic Bitcoin reserve was introduced in Brazil's Chamber of Deputies. Now, I'm no expert on Brazilian politics, but it seems this bill will face many hurdles. But it's more about the trend that we see happening. This is a signpost that the momentum around governments adopting a Bitcoin treasury strategy is increasing. All right, to wrap up this news block, I want to share something from CNBC this week that really stuck with me. Dr. Andrew Hones, the CEO of Battery Finance, which is a Bitcoin investment firm, was on Squawk Box discussing a groundbreaking idea, using Bitcoin as collateral alongside traditional assets like real estate. In the interview, Andrew explains how Battery Finance just pulled off the first loan of this kind. They combined Bitcoin with the collateral for an apartment building in Philadelphia. So the loan isn't just backed by the property, it's backed by Bitcoin too, a Bitcoin-backed building. How cool is that? Andrew broke down why this approach benefits everyone involved in the loan, and honestly, it's such a creative and forward-thinking idea. If you haven't seen the clip, I highly recommend checking it out. You can find it in my newsletter at thenewsblock.substack.com. It is well worth your time. Imagine a future where every property loan includes Bitcoin as collateral. Bitcoin's security, transparency, liquidity, and long-term performance could really transform how credit works. And then take that one step further. What if car loans, business loans, infrastructure loans, even your home mortgage used a little Bitcoin as collateral? Not only would that drive demand for Bitcoin, which would be great for its price, but it could also reduce risks and provide benefits for both borrowers and lenders. A total win-win. It makes you appreciate that we are really in the early days in terms of Bitcoin seeping into every nook and cranny of the traditional financial system. This is the first loan of its kind, but I certainly don't think it'll be the last. And it just goes to show everything is better with a little Bitcoin in it. Thanks so much for watching the news block. Make sure you're subscribed to the show and turn on that notifications button so you never miss any new content. This show is for educational and entertainment purposes. Nothing should constitute as official investment advice, and you should always do your own research. Make sure to subscribe to my newsletter, thenewsblock.substack.com, and we'll see you next week.